So, let's start with our lesson. Welcome to our class discussion. Inventories. So, the related standard for this one is PS number 2. So, the learning objectives in here is that first we need to define what is inventory and identify the recognition of the inventory. We will differentiate what is the difference between periodic and perpetual inventory systems, and likewise we will apply measurements and the cost formula, and how to account for the write down and reversal thereof. So first thing is we define inventories. Inventories are assets held for sale in the ordinary course of business and in the process of production for such sales, or in the form of materials and supplies to be consumed, okay, in the production process or in rendering of services. So it is ordinary course of business. So what is ordinary course of business? This refers to the necessary, normal, or unusual business activities of an entity. Next, inventories encompasses good purchase and held for sale. So example are merchandise purchased by a retailer and held for resale. So meaning, bibili ka ng mga merchandises or inventory and your purpose is to resell it. So you will not change anything. You will not use that in a production or in manufacturing. Okay. Next is land and other property held for resale by a subdivision entity and real estate developer. Inventory also encompasses finished goods produced, goods in process, materials, and supplies. So this is in the manufacturing or in the productions. Next, when to recognize inventories. So inventories are recognized when they meet the definition of inventory and they qualify for the recognition of assets, such as when they obtains control over them. So control normally stems from legally enforceable rights, okay, and legal title normally passes to the buyer when he takes possessions over the goods. However, ownership is not always necessary for control to control to exist, because control can arise from other rights. Okay. Next, what is the measurement? Inventories are measured at the lower of cost and net realizable value. So what are the classes of inventories? Inventories are broadly classified into two, namely inventories of a trading concern and inventories of manufacturing concern. So simply, kapag trading concern is the one that buys and sells goods in the form of purchase. So you will not change, no? So when you buy that goods, bebenta mo lang siya as is. Pagdating naman sa manufacturing concern is the one that buy goods which are altered, okay, or converted into another form before they are made available for sale. In short, there is a modification, okay, or another form of goods at saka mo siya ibebenta. Next, what are the definitions of terms na kailangan natin maintindihan? First thing is that when we say finished goods, it is completed, ready na for sale. When we say goods in process, it is partial completed, okay, which require more work before they can sold. So meaning, hindi pa siya 100% tapos compared with the finished good na ready na siya para ibenta mo. Ang raw materials naman are used in the production process. Okay? So, ito yung kadalasan na directly. Okay? Direct siya sa production. Okay? Manufacturing supplies are similar sa raw materials but ang relationship niya dun sa product is actually indirect lang. Next, owners of goods in transit. So, dito, importante na alam natin ang dalawa, anong kaibahan ng FOB destination saka FOB shipping point because this is the point wherein we will do recognition of the inventory or the sales, no? Yung out ng inventory in the form of cost of sales and the recognition of the related revenue. So when we say FOB destination, the ownership of goods purchased is transferred only upon receipt of the goods by the buyer at the point of destination. So while in transit pa yung goods, ang nagmamay-ari dyan ay yung seller. Antayin mo na yung goods ay dumating sa warehouse ng seller, ay ng buyer, para ma-recognize siya as sales. Okay? So sa point of view naman ng purchaser, para ma-recognize niya na yun ay part ng inventory niya, wait niya until matanggap niya yung goods. While FOB shipping point naman po, yung ownership na is transferred upon shipment of the goods. Therefore, the goods in transit are property na po ng buyer. So, these are the two things na you need to understand because this is very important in the recognition of the inventory. Next, freight terms. We have freight collect, means that the freight charged on the goods are not yet paid. So usually, this is paid by the buyers. Pero, hindi ibig sabihin nun na si buyer talaga ang magbabayad ng freight. Okay? So, hindi yun ang assumption. Pwedeng buyer lang paid yung freight, but it is will be collected afterwards sa seller. Ang freight prepaid naman po is freight charge on the goods is already paid by the seller. But again, it is not that assumption na si seller should be the one paying for the freight. Consignment. Right? So what is consignment? Consignment, it's a method of marketing goods in which the owner is called consignor. Yung possession, nung physical possession, nung goods ay kay consignor. However, transfer of possession of certain goods to an agent is called consignee, who sells the product in the owner's behalf. So, once na yung goods na i-transfer sa consignee ay hindi pa siya nabebenta, no, ni consignee, ang nagmamay-ari pa din dun ay si consignor. Okay? Na ita-transfer lamang yung goods kasi you as consignee to sell it on your behalf. So, halimbawa, si consignee sells the consigned goods amounting to 100,000. The amount remitted to the consignor, actually, the owner of the goods, no, less commission of 15,000 and advertising of 2,000. So, what will be the entry for this one? The consignor will simply record the cash remittance by recording a debit to cash amounting to 83,000, a commission of 15,000, which is an expense, no? It's a selling expense, and advertising, likewise, it's a selling expense amounting to 2,000, and recognize now the sales. Next, how to account for inventories. There are two ways on how accounting for inventories was done. First is periodic system, and second is perpetual system. When we say periodic, it calls for a physical counting of goods on hand at the end of the reporting period to determine the quantity. While perpetual system, it requires the maintenance of records called stock cards that usually offer a running summary of the inventory inflow and outflow. Perpetual system also does a physical count pero it's only for a control purposes. Ang periodic, mandatory na at the end of the period, you need to do physical counting para malaman mo how much is the ending inventory, and you will know how much is to be recognized as cost of goods sold. So let's do an illustrative problem. No? Let's say this is periodic system. So when you purchase a merchandise on account amounting to 300,000, the journal entries in here is we use a temporary account, purchases, debit, and a credit to accounts payable. And then freight in, and then cash, in the amount of 20,000. Debit to freight in, a credit to cash. Return debit into accounts payable, kasi nga ibabalik mo siya, then therefore, mababawasan yung liability mo, and then temporarily, you have to use the account purchase return. And then sales of merchandise on account, so 40% of it is a gross profit. So we recognize accounts receivable amounting to 400,000 and the sales amounting to 400,000. And then return of merchandise sold from customer, sales return, debit, kasi bumalik yung binenta mo, naibenta mo, probably error or mistakes, And then credit, accounts receivable, kasi hindi na to collectible, And then number 6, adjustment of the ending inventory, merchandise inventory end, 65,000, and we use an income summary, okay, amounting to 65,000 as a credit. So this is how we recognize periodic system compared to a perpetual. Okay. Perpetual naman, when we purchase a merchandise, we use merchandise inventory. See? Diba? Sa periodic, ang ginamit natin is purchase. Okay? Purchase. Okay. Payment of freight on the purchase is merchandise ulit, compared with the periodic na ang ginamit natin ay freight in. And then a credit to cash. Pag there is a return, accounts payable, pinalik mo yung goods na binili mo, and then credit to merchandise inventory. And then sales of merchandise account for 400,000, a gross profit of 40%, and the cost of merchandise is 60%. So in here, you will see two journal entries. First, you have to recognize the sales, debit accounts receivable, and then credit sales. Second is you need to recognize cost of goods sold, debit, 240,000 because that is the 60%, okay, from the sales. And then a merchandise inventory of 240,000. So in here, under the perpetual system, the cost of merchandise sold is immediately recorded because this is clearly determined from the stock card. So may gamit kasi sila na nagsisignify sa'yo kung ilan ang nailalabas na inventory. So, madali mo na siyang ma-recognize. Compared with perpetual, wala kang any recording or any information ng outflow ng inventory mo. Okay? Kaya sa year-end ka pa magre-record ng cost of sales mo. Number 5, return of merchandise sold from a customer amounting to 25,000. The cost of merchandise is 60% of the 15,000. So, ito, same lang, ang kanilang recognition sa periodic. So, debit sales return, and then credit accounts receivable. So, since binalik sa'yo yung nabenta mo na inventory, tama lang na i-recognize mo yung pagtanggap mo ng inventory. So, debit merchandise inventory, 15,000, and then credit cost of goods sold. Ito, hindi natin to ginagawa sa periodic. Ginagawa lang natin ito sa perpetual system. Adjustment ng ending inventory. As a rule, the ending merchandise inventory is not adjusted. The balance of merchandise inventory amount represent already the ending inventory because nga they are using a stock card. Now, methods of recording purchases. Okay, we have two ways on how to record purchase. So, again wala pong uh, specified ang standard kung alin sa dalawa ang mandatory na gagamitin. So, the company may use gross method or they can use net method. So, gross method is a purchases and accounts payable are recorded as a gross amount of the invoice, while net method is a purchases and accounts payable are recorded at net of the invoice. So, let's see illustrative problem. Gross method. So, purchases on account amounting to 200,000 to 10 and 30. Ibig sabihin yan, kapag nakapagbayad ka within 10 days, bibigyan ka ng opportunity to avail 2% discount. Ngunit, pag nag-reach out ka na sa 30 days, wala ka ng discount and is no discount. So, we are using the gross method. We will record the purchases at gross. So, debit purchases, 200,000 and credit accounts payable, 200,000. Assume that payment is made within discount period, then therefore, you're able to avail for the 2%. Ito, yung purchase discount na yan. So, accounts payable, babayaran mo na siya, debit, 200,000, cash, 196,000, credit, and then purchase discount 4,000. What if you make beyond discount period, nagbayad ka within 30 days, o hindi mo ma-avail tong 2%. So, debit accounts payable, 200,000, credit cash, 200,000. So, this is a gross method. Next, what if net method naman yung gamit mo? So, again, purchase on account amounting to 200,000 and a discount of 2% kapag nagbayad ka within 10 days. And then, no discount na siya kapag na-reach mo yung 30 days. So, debit purchases, 196,000 and credit accounts payable, 196,000. Ibinawas mo na yung 2%. Assumption, nabayad mo siya within period. Okay, tama lang na i-avail mo yung 2%. Debit, accounts payable, credit, cash in the amount of 196,000. Paano kapag hindi mo na-meet yung discount period? Nakapag debit, nakapag credit ka na ng 196 dito, no? Okay, so accounts payable, 196,000. Ngunit, ang ilalabas mong pera is cash of 400,000. Di may difference ka ngayon na 4,000. Diyan, gagamit ka ngayon ng account na purchase discount loss, which is considered as part of the other expenses. Okay, kasi nga, na-expire. Now, assume it is end of accounting period, no payments is made and the discount period has expired na. So, purchase discount loss, okay, 4,000 and credit accounts payable of 4,000. Bakit? Kasi ang na-recognize mo dito is 196,000. Ang dapat mong babayaran kapag hindi mo na-reach yung 30 days is 200,000. Then therefore, dadagdagan mo yung liability mo ng 4,000. And you will use an account to debit it, yung purchase discount loss, and this is form part of the other expenses. So, halimbawa, binayaran mo, the fifth journal entry, therefore, there is debit, accounts payable, 200,000, and then credit, okay, cash of 200,000. Alright? Kasi nga, hindi mo na-reach yung 10 days para ma-avail mo yung 2%. Okay, so this is the gross method versus net method. Gross method, technically, it violates the matching principle because discounts are recorded only when taken or when cash is paid rather than when purchases that give rise to the discounts are made. However, ang net method naman represent the cash equivalent price on the date of payment and therefore, theoretically, correct yung kanyang historical cost. So, the principles na nababiolate pagdating sa gross method is matching principle. So, let's discuss about what are the costs, comprises, the purchase. Number one, purchase price. Second, if there are important duties, that is capitalized. And then irrevocable taxes, freight handling and other costs attributable to the acquisition of finished good, materials, and service. All those items mentioned are capitalized or form part of the purchases of the inventory. However, foreign exchange difference are not included, which arises directly from the recent acquisition of inventories that involving a foreign currency. Okay? So, hindi siya form part or hindi po siya capitalized. Now, conversion. So, cost of conversion of inventories include costs directly related to the unit's production such as direct labor. So, it also includes the systematic allocation of the following. We have fixed production overhead, those indirect costs of production that remain constant regardless of the volume of the production. We also have variable production overhead, which is indirect cost, and it varies depending naman sa volume or quantity ng iyong production. So, dito, pag sinabi mong fix, ang kanyang fixed production rate, it varies. Pero yung at total amount, constant siya. Sa variable naman, yung variable production rate niya is fixed, pero ang total amount niya, it varies depending doon sa volume or dami ng napoproduce. So, directly attributable cost is the cost of inventories incurred in bringing the inventories to their present location and condition. However, the following are excluded. Okay, tatanggalin mo from the cost of inventories and recognize as expense in the period when it occurred. Okay? So, timing, Number one, if there are abnormal amounts of wasted materials, labor, and other production costs, those are recognized as expense. Hindi po siya part ng inventories. Storage costs, administrative overhead, distribution on selling costs. So, these are not capitalized. These are to be recognized kapag incurred as part of expenses. And last, thank you very much for listening sa topic ng PAS number 2 and inventories. Okay, see you on my next slide. The reference book that I use in my discussion is from Valix and likewise from the book of Sir Milan. Thank you once again.